Yahoo and Alibaba have been feuding for months, but they may have finally settled their biggest point of contention. Yahoo's stake in Chinese e-commerce site Alibaba was seen as one of Yahoo's most valuable assets. As investors began to focus on that asset this spring, Yahoo's fortunes seemed to take a turn for the better. Prominent hedge fund manager David Einhorn of Greenlight Capital bought a stake in Yahoo, and the shares rose. And then a sometimes confusing battle over Alibaba's most valuable asset blew up in Yahoo's face. Editor-at-large Cory Johnson has that story from the Bloomberg West lab. Cory, what do you got?
Well, Emily, you're right. This is a very confusing story. I'm going to try to make it simple using the magic of Mark Lombardi, was this great, the greatest of the conspiracy theory artists. I've stolen his techniques. Let me show you this thing. So in this Lombardi chart here, look at Yahoo. Yahoo owns 43% of this thing called Alibaba. Alibaba is run in China by a guy named Jack Ma. Now, Alibaba owns Alipay, something that's quite valuable to Alibaba. Well, one day, who knew? Yahoo certainly didn't tell us. Jack Ma just took control of Alipay. He said, Alibaba, sorry, they don't own it anymore. Alipay, I own it. Yahoo, you got nothing. The fight ensues. Today, the fight is settled. What we find out today is that 37.5% of Alipay will be owned by Alibaba, which in turn, of course, 43% of which is owned by Yahoo. So with that 37.5% ownership of Alipay, a $500 million payment will be made to Alibaba right now. And later on, there's going to be another payment of anywhere from $1.5 billion to $3.5 billion, bringing the total to, you can add, $4 billion to $6 billion. I'm sorry, $5.5 billion to the $500 million. So somewhere between $2 billion and $6 billion is going to go to Alibaba in the event of a liquidity event, that being an IPO or a sale of Alipay. And so to Yahoo, eventually, $830 million to as much as $2.6 billion. But that might not happen. Alipay may never be worth enough to sell to pay that much money. While this contract stipulates it has to happen within 10 years, if it's going to happen at all, it might not happen at all, because Alipay may never be worth that much money, they never IPO, may never be sold. So that's a slim reward for the shareholders of Yahoo. Emily?
Certainly has been quite a complicated story. Thanks, Cory, for that. Joining us now, Paul Sweeney, senior analyst with Bloomberg Industries, and Larry Haverty, portfolio manager with Gabelli Global Multimedia Trust, a company that owns Yahoo stock. And Larry also has a personal stake in Yahoo as well. So, Larry, let's start with you. As a Yahoo shareholder, how pleased are you with the deal that got done? Is this satisfactory?
Well, I think it's very disappointing on the surface, Emily, because the reality is that any monetary value that the Yahoo shareholders will get for this asset is only going to be realized a long time in the future, 5 to 10 years probably. But I think a lot of times the market really gets it wrong, and I think what you've had here is an emotional bottom in the Yahoo stock. And I think the thing that the market has gotten wrong is that sitting still in Alibaba Group, which is 43% owned by Yahoo, is this thing called Taobao. And Taobao is basically the eBay and the Amazon of the Chinese internet. And the Chinese internet transactions this year are bigger than U.S. internet transactions. They're growing much more rapidly, and Taobao has a 50% share. The Economist this week had a very, very nice article on it, and that's still sitting there. It's going to be worth X today. It's going to be worth X squared probably in 5 to 10 years. There's not any problem about foreign ownership in this. The Alipay thing all triggered when the Chinese government, which is a necessary partner in the creation of wealth for owners of equities in China, when the Chinese government decided that Alipay had to be 100% owned by the Chinese. So that's what triggered this festival. The Yahoo management wasn't told about it, didn't tell the shareholders. That was not very helpful, but there's still tremendous value here.
Larry, Paul, I want to send it out to you. What are the corporate governance issues here? Was Yahoo not transparent enough?
Well, it's very unclear. I think the issue for Yahoo investors, quite frankly, was that it's very unclear as to when Yahoo itself was told by its partner Alibaba about the change in ownership. And then there's also a question about when Yahoo did, in fact, find out. When did they disclose that to its shareholders? So, and quite frankly, it still remains a little uncertain right now. Now, what clearly the market's focusing on is, what does this new deal mean for Yahoo shareholders? Did they, in fact, get diluted in their ownership stake of Alipay from, what was a 100% stake down to, perhaps 37.5%? And I think that's probably what impacted the stock today.
Yeah, Yahoo stock did take a big dip today despite this deal. Paul, does this show the dangers of doing business in China and some wider concerns for Yahoo shareholders because of that?
It certainly illustrates what I think investors have always had in the back of their mind, that there is a certain cost of doing business in China. As Larry mentioned, many of these businesses must be done in cooperation with the government. But the reality here is, as Larry mentioned, is that the real value of Alibaba Group is in Taobao, and Yahoo certainly has its 43% interest in Alibaba Group, and as that business grows, Yahoo should benefit. The key thing about the transaction today, which is a real positive, is that the very favorable relationship between Alipay and Taobao has been preserved as part of this transaction. So that should allow Taobao to continue to grow and to create value for Alibaba, and then presumably by extension for Yahoo.
Now, Larry, you have been calling for Yahoo CEO Carol Bartz to step down. How does this change or impact your opinion on whether she's the right person for this job?
Well, I'm calling for the board to think about this, Emily. I don't. That's not my my job. We vote for the board. We voted for the board, and the performance of the stock is very, very disappointing. She hired a new sales force that didn't perform in the last quarter. The search venture with Microsoft hasn't performed. It's one strategy after another, and the cash flows have been stuck at a time when the internet is moving forward and the train's being left at the station. I think she should have been on the call today to, talk to investors. I don't think it was right for her to designate that to the CFO. And I just think that the market right now is valuing cash flow in Yahoo at levels that, frankly, I have never seen. Under our calculations, it's under 2 times cash flow. It's a bad report card for Ms. Bartz.
Larry, let's clarify this point, though. Do you want Carol to stay or go?
I think the board needs to seriously consider things, Emily. That's really as far as I think I can, I can go. The market's sending a very bad report card here. And if there are questions about the governance failing in this Alibaba situation, and I think there should be, there are really serious issues here.
Paul, how is this going to affect Yahoo's bottom line?
Well, I think going forward, I think the expectation is, there's certainly some expectation that there's tremendous value in the Asian assets, and I think that is, in fact, still the case. This was a little bit of a disappointment in terms of the actual structure of this deal as it relates to Alipay, and that was reflected in the stock today. But I think going forward, the real focus for this company is to efficiently monetize those assets over time, and then secondarily, as Larry mentioned, to get the top line growing, to grow their search and display advertising, which they've not been able to do on any consistent basis. That's what the market is looking for from a fundamental basis.
Paul Sweeney of Bloomberg Industries, Larry Haverty of Gabelli Global Multimedia Trust, thank you both for weighing in on this debate. Let's bring back Cory now for some perspective. What's your take on their thoughts there and the fact that Yahoo stock still way down despite this agreement?
Yeah, the value investors like to look at what something's ultimate break-apart value is, but breaking apart a company isn't sort of the best way to get value sometimes. It's interesting that they're still looking at Taobao's worth something and something more in the future, they hope, not really thinking that maybe Yahoo can be a functioning, growing business. I thought it was really interesting the way Larry said the internet's growing, the train's left the station, Yahoo's still there.
Is this going to come to a head for Carol Bartz and her future there?
Who knows? I mean, Carol, I've covered Carol for a long time. She's a very dynamic person. Yahoo was a mess before she got there. It was a mess before Terry Semel got there. And it's been a federation, not a company, for a long time. And turning that battleship is seeming to be very difficult for Terry Semel. It was very difficult for Carol. It was very difficult for pretty much everyone who's run that company since about 2002. And
the stock has dropped 27 or so percent so far this year. So she definitely does have her work cut out for her if she wants to stay in that position.
And those corporate governance concerns are no joke. I mean, if you're a shareholder of this company and they didn't tell you what's going on, you still got to be pretty mad about that. That's why people are getting out of the way.
And clearly, shareholders are very upset. Larry Haverty himself. All right, thanks, Cory, for that. Now.